Air Canada came out with a forecast and targets for 2025 and longer term. It looks like the market wasn't thrilled. Let's get more from Bloomberg's Stephanie Hughes. Stephanie.
Hey, Andy. Yeah, you could say that again. So Air Canada shares fell by 9.5% today at its lowest point there. And that was its biggest intraday drop since May and made it one of the worst performers on the TSX. In fact, the worst performer on the TSX for a good chunk of the trading day today. And like you mentioned, while the guidance for 2024 and 2025 were relatively in line with expectations, Scotiabank analyst Konark Gupta said the longer-term targets and aspirations for 2028 and onward might have disappointed the markets a little bit here. The team specifically pointed to the free cash flow margin modeled around that time, which was only a modest expansion from what we're seeing this year. They also flagged some other headwinds for Air Canada, such as sticky inflation costs and higher capital expenditure requirements. Citigroup analyst Stephen Trent also weighed in, saying that the margin expansion was either in line or slightly below the rivals like Delta and Alaska Air. Also said that the fuel guide might be a tad optimistic, just based on Canada's expectations for a more flattish dollar. So traders are sifting through this outlook, and they're seeing a few warning signs there, Andy.
Yeah, it's interesting. Aviation, I mean, Air Canada's still up more than 20% this year, but aviation can be so tough on investors. And look at poor Boeing, down more than 30% this year. And apparently the analysts aren't looking for much joy next year. One was quoted by Bloomberg as saying, the best thing for Boeing would just be to stay out of the news right now. Yeah, exactly. Never seems to be good news. BlackBerry, what's going on there, please?
So it's been a better day for BlackBerry, I got to say. Those shares rallied by over 5% today, extending some double-digit lift that the shares saw yesterday. And that was because BlackBerry announced an agreement to sell its cybersecurity assets in Cylance to Arctic Wolf for about $160 million in cash and $5.5 million in common shares. BlackBerry held on to these assets for about 6 years, initially buying it for a $1.4 billion purchase price. And RBC analyst Paul Treiber said this week's price tag is a far cry from that $1.4 billion acquisition price, but they said that the sale outcome was much better than expected, given that this segment had been losing money. So analysts argue that with this liability out of the way, BlackBerry, the former tech darling, can now focus on its Internet of Things business there, Andy.
And you've been writing about Groupe Dynamite. It just went public last month, and they announced sales ahead of expectations for their first quarter as a public company.
That's right. Yeah, it was a pretty strong quarter for Groupe Dynamite today. Those shares went up about 3% at its highest point, briefly touching an all-time high since the company went public last month. And its earnings of 41 cents per share came ahead of consensus of 38 cents. And a lot of that was driven by same-store sales growth and this expansion into the U.S. So on the call, the CEO said that they were looking for more expansion opportunities within the U.S. and eventually the U.K. He also commented on tariff policy and how they're going to mitigate those impacts, seeing as most of its production is in China, and China is expected to be hit with even more tariffs. So they're looking at starting to shift their production away from China, or at least have less of a reliance there. But all told, it seems like a pretty strong first earnings report as a public company for Groupe Dynamite there, Andy.
Thank you very much indeed, Stephanie. Bloomberg's Stephanie Hughes.